Hello everyone, and welcome back to the channel. If you've been watching the markets, you know it's been a bloodbath. After Bitcoin took a dip, the altcoin market didn't just follow, it absolutely plummeted into the abyss. We are talking Ethereum down 15 to 18%, Solana dropping a hefty 20%, XRP sliding 30%, and as for the meme coins? Well, they crashed even harder, some practically vanishing overnight. It's painful, I know. Watching your favorite altcoins, projects you believe in, dive like this can be gut-wrenching. It feels like the floor has just been pulled out from under you. But before you hit that panic sell button, take a breath. There's a critical lesson to be learned in all this chaos, a pattern that repeats itself time and time again in the crypto world. Understanding this pattern is the key to not just surviving these downturns, but potentially thriving in them. So stick with me, because today we are going to dissect this crash and turn that fear into a clear, actionable strategy. So, why do altcoins always seem to crash so much harder than Bitcoin? It's a question that haunts a lot of investors. The simple answer comes down to a few core factors: market size, liquidity, and fundamentals. Think of Bitcoin as a massive, deep ocean liner. It's held by millions of people, institutions, and even countries. It's incredibly liquid, meaning you can buy or sell large amounts without drastically moving the price. Now, think of altcoins as smaller speedboats. They have much smaller market caps, less trading volume, and are often held by a more concentrated group of investors. When a storm hits the market, like a big Bitcoin sell-off, that giant ocean liner might rock and sway, but the speedboats get tossed around, completely swamped by the waves. A sudden rush for the exits in the altcoin market can wipe out liquidity in an instant, causing prices to collapse dramatically. Analysts like the well-known capo of crypto have been warning for a while that Ethereum and other top altcoins could face severe sell-offs during major downturns. It's not about spreading fear, it's about recognizing the inherent risk. These aren't just random price movements, they are predictable patterns based on market structure. Understanding this dynamic, that smaller markets carry bigger risks, is the first and most critical step to navigating a crypto bear market without letting panic take control of your portfolio. Now, I know it all sounds pretty bleak, but here's where things get interesting. In every crash, there's a silver lining. These brutal market corrections act like a massive filter, shaking out the weak projects and revealing the ones with true, lasting value. This is where opportunity is born. Historically, strong projects with solid fundamentals don't just survive these downturns. They tend to recover and often reach new all-time highs in the next cycle. Ethereum is a prime example. Despite its recent drop, its foundation is incredibly strong. It's the backbone of decentralized finance, DeFi, the home of smart contracts and NFTs, and has widespread adoption and a massive developer community. Its utility gives it a level of resilience that most other projects simply don't have. On the other hand, smaller, more speculative altcoins are a much riskier bet. Many will never recover. But among them are hidden gems, projects with groundbreaking technology, a dedicated and brilliant team, and a real-world use case. These are the ones that can bounce back with incredible force. The key is to look past the hype and the price charts and dig deep into the project as core value. The potential for recovery is directly linked to the strength of its fundamentals, not just its popularity during a bull run. So, how do you actually invest in altcoins without getting completely wrecked during these volatile periods? It's all about having a smart, disciplined strategy. First and foremost, if you genuinely believe in a project's technology and its team, don't just buy randomly. Define a price range where you feel the project is undervalued and stick to it. Buy in increments as the price falls into your target zone. This is called dollar cost averaging, and it prevents you from going all in at the top. Second, and this is non-negotiable, diversify. Never, ever put 100% of your crypto portfolio into a single altcoin, no matter how much you love it. A good rule of thumb is to keep a significant portion, say 50 to 60%, in Bitcoin. Think of Bitcoin as your anchor, providing relative safety and stability while your altcoins offer higher growth potential. Third, you must be prepared to cut your losses. If the fundamental reasons you invested in a project change for the worse, the team leaves, the technology fails, or a competitor makes it obsolete, you have to be disciplined enough to sell and move on, even at a loss. Holding on to a failing project out of pure hope is a recipe for disaster. Following these simple rules will help you build a resilient portfolio and allow you to survive the market's wild swings without making emotional, panic-driven decisions that you'll later regret. Let's be real for a moment. Watching the value of your portfolio get cut in half, or even more, hurts. It's an emotional gut punch. We've all been there, staring at the red candles, feeling that knot of anxiety in our stomachs. It's completely normal to feel that way. But the difference between amateur investors and professionals is how they react to that feeling. Professionals have learned to separate their emotions from their investment decisions. They understand that market cycles are a natural part of crypto. Instead of chasing hype and short-term gains, they focus relentlessly on quality. This isn't just a theory, it's a lesson written in crypto history. Go back and look at the great crash of 2018. Thousands of altcoins existed back then. The vast majority of them lost over 90% of their value and never came back. They disappeared into obscurity, taking their investors' money with them. The only ones that survived and went on to thrive in the next bull run were the projects with strong fundamentals, real utility, and resilient communities. Learning from history is our best defense against repeating the same mistakes. By focusing on quality over temporary hype, you can position yourself to weather these storms and come out stronger on the other side. So, what's the long-term perspective here? The truth is, altcoins will likely always be this volatile. They represent the cutting edge of innovation in the crypto space, and with high innovation comes high risk and high reward. They are the high-stakes table of the crypto casino. But that doesn't mean you can't win. Disciplined, patient investors don't just survive these cycles, they use them to their advantage. They see a market drenched in fear not as an ending, but as a buying opportunity. The strategy is simple, but not easy. Identify projects with strong, unshakable fundamentals. Diversify your holdings to manage risk, using Bitcoin as your portfolio's foundation. And most importantly, invest with a clear plan and the emotional fortitude to stick to it, even when it feels like the world is ending. It is crucial to remember that the pain you might be feeling now can be the very foundation for incredible gains later. The market has a way of rewarding those who hold their nerve and their high-quality assets through the storm. Over time, the charts will turn, and strong projects like Ethereum and Solana will begin their climb back. It's a cycle, and your job is to be positioned for the recovery. If this breakdown helped you make sense of the chaos and gave you a clearer perspective on which altcoins might be worth holding and which ones it might be time to cut loose, do me a favor and hit that subscribe button. We are here every week, breaking down the complex world of crypto into simple, actionable strategies designed to help you turn fear into opportunity and volatility into profit. Thanks for watching, and I'll see you in the next video.